Hi everyone, and welcome to October's monthly update. This month, we've seen a mix of caution and key developments shaping the financial landscape. I'll cover the market's response to a few major factors, from the upcoming US election and interest rate decisions to some eye-opening reports on superannuation spending that are raising questions. We'll also dive into Australia's recent inflation drop, which may hint at what's ahead for the Reserve Bank rates decisions, and touch on the latest retail sale figures showing how households are adjusting. Just a reminder, this information is general and is meant for my clients, friends and family. If you're after personalised advice, do not hesitate to reach out anytime. The regulatory body recently revealed that superannuation funds collectively spent a massive $423 million on marketing, with some of the largest industry funds using retirement savings to sponsor sports teams, fund various advertising efforts. The top 10 marketing budgets came from industry super funds, totaling over $300 million, with Australian Super leading the way over $60 million, Australian Retirement Trust spending $41 million, and Hester and Cbus spending over $34 million. These funds have also allocated around $14 million to unions, raising questions about whether these expenses align with the core purpose of managing people's retirement savings responsibility. Now, ASIC is now scrutinising marketing practices across super funds to ensure their advertisements are transparent and the product risks are accurately communicated, rather than focusing solely on attracting new members. This is a big deal because these market expenses ultimately come from the retirement savings of individual members, your funds and profits. It's a reminder why regulatory oversight is crucial in ensuring superannuation funds put members' best interests first. So let's talk about inflation, because there's been some positive movement this quarter. In the September quarter, inflation rose by just 0.2%, the lowest rise we've seen since June 2020. Annually, inflation also eased to 2.8%, making it the lowest rate in almost 3 years. This means Australia's cost of living pressures are starting to ease slightly. The key measure the RBA watches, known as underlying or trend mean inflation, is also falling, coming at 3.5%, down from 4% last quarter. Although it's still higher than the headline rate, this drop indicates inflation is generally moving in the right direction. Most economists are predicting that the decrease in inflation won't be enough for the RBA to cut the cash rate at their upcoming meeting. The RBA has stated that they're keeping a close eye on the underlying inflation when deciding on any rate adjustments, although it is a promising time for early next year. So let's dive into the ASX and broader global markets. The ASX 200 held relatively steady this month, down about 1.3% overall. Traders seem to be sitting on the sidelines in anticipation of what's expected to be a very eventful week ahead, which could shape the path for markets heading into year end. Next week, several key events are set to unfold. We'll see interest rate decisions from major central banks, including the RBA, Bank of England and the US Federal Reserve. China's National People Congress Standing Committee meeting is also expected to reveal more about its fiscal stimulus package, which could have a ripple effect in global markets. In the US, markets are especially cautious as we approach the upcoming election. The S&P ended a 5-month streak of gains, closing October with a 1% dip, while the Dow and Russell 2000 saw similar declines, down 1.3 and 1.5% respectively. Investors are moving cautiously as election uncertainty often leads to increased market volatility. This hesitation stems from the potential for policy shifts depending on election outcomes, which could impact everything from tax policies to regulatory changes affecting sectors like tech, finance and energy. Although recent economic indicators have suggested that the US economy may avoid a recession, there are still concerns. The expectation is the Federal Reserve will hold interest rates for the short term and then see where the election leads up. Meanwhile, Australian retail sales numbers for September rose by only 0.1% month on month, missing expectations and showing that Australian households remain cautious as the RBA's rate remains on hold at 4.35%. This slow spending growth adds to the case that consumers are feeling the pinch of higher interest rates and aren't likely to fuel strong retail momentum soon. With so many major decisions and events lined up, markets will likely remain volatile as investors wait to see how these factors play out. If you'd like to discuss how this may impact your portfolio, feel free to reach out to me. If you have any questions regarding the above, please do not hesitate to contact me. Your financial well-being is our top priority.